Good afternoon, everyone. We are here with Jason Pitarra. He's the branch manager with CrossCountry Mortgage. Jason, thank you for being here.
Thank you for having me.
Of course. I want to talk about and educate our clients about the current market situation. Jason, is this a good time to buy a home?
I always think it's a good time to buy. Unless you're only going to be a couple years, and then I would say don't, and maybe really crunch the numbers, and we can show you the data on that with the sell costs, etc. But if you look at all the latest forecasts for 7 of the top forecasters in the market, the range is between 1.9, almost 2%, and 5%. If you average all of the 7 out, they're saying we're going to see in 2024 around 3.25% appreciation.
Obviously, that is the fact. You cannot always buy the equity. You can always refinance. So it's a good advice to consider if you're thinking about buying a home right now, to make sure that you save money on the cost. For those that are out there thinking about buying their first home, what is your advice to them?
Well, let's talk about what is considered a first-time home buyer. So that's anyone that has not owned a home in the last 3 years. There's a lot of confusion on that. So regardless if it's their first time or it hasn't been 3 years, regardless, the best step is to talk to your mortgage professional, mortgage broker, mortgage banker. Find the best solution for your family. I've found that the best solution is covering their monthly payment goals, their out-of-pocket goals to close on the transaction, and then we'll look at their application and personal financials and structure the best loan for them. And of course, down payment assistance is a very popular product. We have a ton to choose from. Some go all the way up to $103,000, $104,000 in income. That's a substantial amount, wouldn't you say? And some, if you make over that, you still qualify, and some you still qualify, but you have to pay back the assistance. So there's a lot of options. Really sitting down with a mortgage professional like myself to figure out what's best for your scenario is going to get you in the right direction.
Thank you. Yes, it is very important because a lot of the down payment program that comes in, it becomes very valuable for those of you that are wanting to save as much as money and bring as minimal amount of money to the closing. So I highly encourage you to get with a mortgage professional and get all the information about it. We get these questions asked a lot these days. I want to wait. Interest rates coming down. What is the pros and cons of waiting?
So that's another great question. It comes up on our side all the time as well. Clients that say, I'm going to wait for rates to drop. I'm going to wait for prices to drop. Well, Cameron, actually, if you look at all the data, nothing is like 2007, 2008. I have a long presentation on this. It's statistics, it's data. It tells you we are in no way like 2007, 2008. That was a housing bubble, housing crash that everyone that has been doing this for a long time remembers. From employment, unemployment, foreclosures, delinquencies, none of the data is anywhere near close to what it is. We have a major inventory problem. We know that housing, we're going to have a shortage they're projecting 2 to 3 years. Home prices are going to go up, depending on who you talk to, 3 to 5%. So that $300,000 home is going to be $9,000 to $15,000 higher. And they're also saying for every 1% in rate drop that we see, we're going to see another 5 million home buyers in the market. You remember back a couple of years ago when we had too many buyers in the market and they couldn't negotiate a price on a house because there were too many offers. So
definitely, you don't want to be in a multiple offer situation if you're going to be a buyer, because the prices will definitely go up. And those are really, really good advice to consider if you're thinking about buying a home, whether it's now or in the next future, to consider what's the best financial move for you. Could you please talk about the bank statement program that most of the mortgage professionals talk about for self-employed clients?
Absolutely. So self-employed clients in general, this is my 21st year doing this. We run into this in almost every self-employed client. We try to take advantage of as much of the tax code and write-offs that the IRS gives us. That means less taxes, right? So our self-employed clients will write off every single thing they possibly can and more. So it becomes a challenge. Traditional banks, traditional guidelines require 2 years of tax returns. And we always tell our clients, it's not what you claim gross before taxes, it's what did you claim to the IRS after taxes. You know about this. And so one of the challenges we run into, if they take a lot of write-offs, they just don't have enough income based on what they report to the IRS to qualify for a mortgage loan. So there's a great solution, bank statements. Bank statement loans will allow you to take 12 or 24 months of bank statement deposits, either personal or business, and we don't look at tax returns. That's the beauty of it. And we'll take the average deposit, call it $100,000 a month into their business, into their personal account, and we can take 50% of that as their effective income. $50,000 a month, don't look at their tax returns. That's how much they get to use on the mortgage application to qualify.
That's a great program, especially, again, for self-employed clients, it is a really, really good program to definitely take advantage of.
10% down as well. So you don't have to put down 20% like some of the other alternative programs, 10%, and you qualify if you have the right credit score for bank statement.
That's wonderful news. Jason, $1 million question for you. A lot of people are thinking about this, are asking about it. They're excited to hear what the 2024 will look like as we approach toward the end of the year. What do you see?
Well, that's the $1 million question. I wish I had the crystal ball, but I can tell you from all the folks we follow, a lot smarter than I am, here's a lot of the data I'm seeing. First and foremost, the elephant in the room is rates aren't going back to 2s and 3s. If you look at the historical average from 1971, I believe, until now, the average going rate is 7.74. The rates should have never been as low as they were. COVID caused an artificially low time. We've got to get past that. Let's get back to a new normal. No, I don't think 7.74 is a new rate. In fact, June, the Fed's fund cut rate, or the Fed's to cut the rate for the first time in how long? 2 years? Do you remember? It's been a long time.
2.5 years.
A year and a half, 2 years, right? Right now is a 50% chance in June. So they're not doing it in March. They pretty much admitted that. It looks like June is a 50-50 chance. And the other thing we have going for us is a lot of folks don't even talk about it, but the 10-year Treasury and the correlation between that market and the mortgage rate market is usually between a 1.5% and 2% spread. We've been sitting at 3%. We've had Congress and state representatives say, let's just fix the spread, and we see rates come down 1%. Maybe that's our new normal. So we've got a Fed cut coming. We've got, hey, get past rates are not normal from what we saw in 21, 20. And then we're talking about all the statistics on home appreciations. I mean, just look at the real estate market for the last 81 years. You don't bet against it. I think it's 73 times we've gone up, a couple times flat, a few times down, but historically it goes up. So we're seeing the market go up, real estate appreciate. We still have an inventory problem. Rates are probably coming down, and by now you can refinance later.
Thank you. Thank you for all this valuable information. We appreciate that.
Yeah, thanks for having me.
I'd just like to take this time to thank you for meeting with us, giving us a very valuable and insightful information out of your very busy schedule. We truly appreciate that. For those of you that are interested in learning more about the mortgage products, information that you need, please contact Jason Pitarra's office team at 361-651-5008, and I'm pretty sure they'd be glad to help you with all your mortgage questions. Thank you for your time again.
Thank you.